Good evening, everybody, and welcome to tonight's edition of Live Market Analysis. It's a pleasure to be with you as we pick up the pieces of a very big black candle on US markets on Friday, but seemingly going to amount to absolutely nothing, with futures pointing to the same sort of rally on Taco Tuesday will be, because US markets close tonight. So Taco Tuesday on tap for investors. Let us, before we do that, go to the disclaimer, which says that everything we're going to discuss tonight is general in nature, has not taken into account your personal financial circumstances, objectives or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information that is in that disclaimer is important. You should read in your own time. The most important stuff, of course, being that you are responsible for everything you do with your money, and that at some stage you are going to lose some of it to the markets. And I think a few of us probably experienced that in the last 24 hours, or maybe even on Friday night in the US. The agenda for tonight is fairly simple. You ask the questions, I'll give you my best technical analysis reader, or you may wish to pick my brain on anything to do with the 3 M's of trading. That is the methodology, money management, and the mindset. But anything is open slather tonight. Let us head over to the AMI broker window, and we're going to kick off not with spodumene concentrate, Aussie spod concentrate, which I don't know, I said look, bump along the bottom. It's not quite on the bottom, is it, this one? But certainly the lithium carbonate potentially could go that way. It's not where we're supposed to be. It's a total accident. I wanted to head over here to the big black candle of the Nasdaq composite, which, look, partly to do with the Trump comments. You've all read about it, of course, where he threatened, further major punitive tariffs on China, but probably also due to the fact that tonight or Monday will be their Columbus Day holiday. So it was probably the 3-day weekend in combination with those comments that caused that big sell-off. But you can't say it was a fluke or an aberration, because there was some decent volume in it as well. So we can see down here, above average volume, not substantially above average, but certainly above average. So we saw, an above average amount of supply hitting an above average amount of demand on the way down, but clearly the supply was far more motivated. The demand, whilst they were still there, soaking up stock, they were pretty much getting out of the way while they're doing it. The last time we had a candle that severe, well, probably if you blended these two candles together, that would constitute, but the one that I think looks most similar is that one there, because that's, at the top of what was at the time a record-breaking run. Just a string of demand-side candles, value investors pulling their hair out, saying stocks can't possibly go higher than this. And yet, we were 2,000 points higher than that. And guess what they're saying? They're still saying stocks can't possibly go higher than this. I told you so. I told you that this would not last forever. And they were right. Looks like they're going to be right for 5 minutes, because Nasdaq futures, if we head over to the browser and we go to marketwatch.com and we click on the futures tab, you can see there you can unlock the introductory offer if you like, but if we go to the futures tab, we can see plus 1.8%, which is not as much as they were down, but for the most part undoing the craziness of Friday. So where does that leave us? I think that's where we need to move to next. Where does it leave us? Well, it leaves us pretty cautious, because that black candle has been logged. It's there. It was above average volume. It's not an aberration. It's not a mistake. When we see such downside volatility, such supply side control demonstrated in the market, we often say this phrase, we've found supply. Up to this point, we haven't seen supply in the market. It hasn't been active. It hasn't been motivated. It's just happy to go along with the ride. And then there's a catalyst. There's a news catalyst. We can't see the catalyst because we're trend followers and we can't see the future, right? Nobody can. All we can see is what's happened, and what's happened is as a result of news. And that word NEW, which is in that word news, is the important bit. It is new. It didn't exist before. Now it's there, and markets have to deal with it. So it's not a matter of, you should have seen that coming. No. You never see it coming as a trend follower, but then you deal with what you get afterwards. And what we're going to do is nothing. As I said in today's Chart Watch Markets, we're going to wait for confirmation. I think it's very important in this case. Another candle, similar to this one. And whilst that candle there did not immediately spell disaster, it did set the tone for what was to come. which was we didn't see that immediate about face, that quick buy the dip confidence that is akin to a bull market. And yes, we chugged around for a while, but I think that second candle was telling. I'm not saying we'll make a call if we see one like that. I know that it sounds like it's not. We will assess it when it's there, but I will certainly look at that sort of candle in a very, very poor light, because if this demand side market is still in place, we should see a very strong demand side response very quickly. And as I said also in that update today, we've had a period of excess demand, and logically speaking, if you have some supply come in, then your most, the next natural place to go is equilibrium. It's not crash, right? Although crash is possible. The most logical place to go is equilibrium, which is sideways. And then we see which party takes over. In that case, certainly the supply side took over. We're looking way too far into the future, because I don't like to look any more than the next candle ahead, and even that's one too many. Bottom line is, what are we doing with our risk? I am proposing FRP still, but again, as I said in today's update, not rushing to replace any risk that was knocked out on Friday night. Let's head over to the ASX 200, where we saw a candle that was quite modest in response to that Nasdaq candle, but we were trading for most of the day with the benefit of those futures being up. They rose throughout the session. So, as I said in the other update, I'm doing lots of updates now, aren't I? It was disappointing. I feel it was net a disappointing day altogether. We could have put in a better performance, but we are talking about the old tin pot, aren't we? If you're on gold, if you're on critical minerals, you didn't see that black candle, did you? You had no idea that was happening. So FRP there's still plenty that needs to happen before we would change our risk position on that. But watching, obviously, you don't want to see it close beneath the short-term trend ribbon. I'm happy to let that pass without changing risk management, but certainly 87.31 is a go-no-go zone for this bull market. Let us do the whip around the grounds and see if there's anything in those global charts to push us off this idea of still maintaining FRP. And this is one that could well do that. That's a nasty candle. Also closing beneath the short-term uptrend ribbon. The Nasdaq one did too, by the way. Taking out an important trough, I think, here. I don't think the comp took out any troughs. It didn't, but the Russell did, so that's a relative weakness there. And, a couple of little tickles of that high and then pull back, that's never a good look. Is it enough to push me off? No, it's not, but it is enough to grow my concern, grow the seeds of my concern. What are the mid-caps? Look at that. That's the mid-caps. Not looking so good there. Heading over to Europe, that's not great, but not a reason to do anything else. In fact, none of these are, so we'll keep moving. Where's the smoking gun? I don't think it's there either in Hong Kong. It's certainly not there on the Nikkei. That still looks tremendous. In India, we're fine, and we're still fine there. So that's today's candle. So we did see a response there from China. China, who's the subject of these so stupid, ladies and gentlemen. It's so stupid what's happening in the world right now, and we are helpless in the face of this stupidity, aren't we? What can we do? And not so bad there either. And heading over to the but he's somewhere else now. He's about to get the presidential the Presidential Medal of Honor in Israel, so that's all he cares about. The discretionary sector, how's that looking? A little bit iffy, actually. That's potentially having a transition there. Energy's already transitioned. That doesn't look great. Financials, okay, flat. Gold, still okay. Healthcare, not a place to be, in my opinion. Technology is rolling, I feel. Materials still okay, but a nice little reversal pattern up the top there. Properties sideways. Staples looks rubbish. I mean, that's the worst chart I've seen so far. Woolworths looks particularly bad. Telecommunications sector, that doesn't look great. And utilities is flat at best. So you look at that and you say, well, where's the XJO bull market going to come from if this is going to perpetuate itself? And it's hard to see from those indices. I mean, if those are the beating heart of the universe of opportunity of fund managers, what are the fund managers telling us? they're hardly what you say is rushing in. Okay, we can head over to the base metals now. We did lithium at the start. I don't think we need to add to that at this stage. But let's put on the line chart and go aluminium. Hey, there we go. We have been tracking this for a few weeks, haven't we? So that's good to see that pop up, as is copper. If you're a patron of ChartWatch, you know all of this stuff already. Nickel actually turning back to a long-term neutral trend. How about that? Lead is actually technically showing dynamic demand at the long-term trend. Tin is still okay, bit of a down week, and zinc still looking very good. So base metals moving. Interesting. Is there a big global growth pulse coming? That would suggest it, but I wonder if it's all just been caught up in some of these trade tailwinds of this materials security concept that's going around and causing some commodities to rise and some stocks to rise, even though the commodities aren't rising, just these re-ratings that are occurring. Let us head over to the trading view screen. That's where I'm going. And, well, we'll do Bitcoin simply because it's on screen, but there's nothing really to see there, is it? I think last time we looked at it, we saw it tickle those highs. We saw these two candles with shadows and might have said, look, just a little bit of caution warranted. It turns out a lot of caution was warranted, but not that I saw that coming. It was all part and parcel of that Trump comments risk-off move anyway. And while we're on crypto, we might as well do Ethereum, which is similarly hit as well. Let's head over to where we normally go after our base metals, which is our precious metals. And we can see after what was, in my opinion, a credible supply-side candle there, a move straight back up. And that is, again, a function of those comments because markets went risk-off, and that means precious metals are beneficiary. Not that I predicted the end of the world there. Go read what I've written. It is in black and white. I said, look, we might see a little bit of a pullback. I didn't change risk position, still FRP on both, but expected some sort of pullback. That goes to show how strong these markets are. This last candle is live though, so we have to discount it. I know it looks very good. If it closes there though, then that's a very strong sign that we're going higher. I got an email from one of the market index readers who, and none of you, by the way, but a market index reader who said, hey, Carl, you didn't say anything about the round numbers. The fact that silver was smack bang at $50. I mean, you pointed out the candle, you pointed out the price action, but you didn't talk about the round number. This is a person I've never mentioned round numbers to. And he was absolutely right, 4,000 on gold. And I missed it. I just missed it. I was so focused on those candles, I didn't even look at the price. And often I don't look at the price. But yeah, absolutely. This is a perfect explanation. These round numbers are a perfect explanation for why we saw that supply there. We saw some supply. And that's what we'd expect at big round numbers in such amazing bull trends, is some supply, people taking some profits, maybe some people thinking, oh, that's too high, my brain can't comprehend that, I'm going to take some shorts. So it makes even more sense for those pullbacks to have occurred there, and it makes even more sense that we're still going because it's just a some supply event. Did I say, and I said, well, we know platinum's been looking strong, but I think I said last week that palladium was a bit ho-hum. I said palladium was the last one to go and therefore probably not worth pursuing. And look at that, it completely proved me wrong. Maybe look a bit silly, didn't it? Because it ended up being the best one this week. But not that I said it was bad. I just, I said, well, I acknowledged it was good, but the other ones look better. And to be fair, silver and gold are still probably, relatively speaking, holding their own in that regard. Copper did have a pullback on Friday. Again, I keep repeating this, but it's you know what. Iron ore heading up, and this is nothing to do with any of those comments, I wouldn't think. This is just the fact that we know those Chinese stock indices, which we looked at before, are doing well. We know there's a correlation between those stock indices ultimately and the shares, BHP, Rio, Vale, and iron ore. And I've been telling you this for a long time. Do not underestimate this chart when there's a bull market going on in Chinese stocks. It'll get dragged up regardless of the fundamentals. So that's impressive, and not that you're going to trade it, of course, but potentially what it means for whether you're going to follow some other trends around the place. Let us quickly look at the uranium price, which needed to bounce there. It sliced straight through that short-term uptrend ribbon, which is disturbing. It went into lower peaks, lower troughs. It sliced through 79.95. It really shouldn't have done any of those things if it's in a strong demand-side market. So that's disturbing. But we have got a decent bounce. It needs to continue, needs to get back up and keep going. Because if it was to fall beneath whatever that trough is there, 77.60-ish, then it could be just a nowhere for a long time sort of proposition. Having a look at some of the energy complex here, I think we'll find weakness generally. The natural gas prices heading down. I know we're not going to trade these, but just looking at the various shapes of these charts to understand whether fund managers are moving into energy markets or continuing to shun them. And I think it's more the latter rather than the former. Let's finish off our whip around the grounds by checking out the bond market, and we did see some decent falls in yields, benchmark yields on Friday, and that is obviously there's an inverse relationship between bond yields and bond prices. So if we're seeing yields falling, it means bond prices are going up because people are bidding up bonds. We saw money rotate out of equities, risk-off move out of equities into the relative safety of bonds, and that all kind of makes sense. I would have been more concerned if I had seen some discrepancies there. That's not where I wanted to go. Go back there. I'm trying to get rid of that thing so I can go back to a candlestick chart. So I'll look at the candles. General trend down there, that's more to do with slowing US economy, probably exacerbated by the shutdown, Fed cutting rates, but we certainly don't want to see some of these long yields staying high or creeping high, because that would be a lack of faith in the US financial system. So it's still all making sense there. Not a precipitous fall yet, but I'm going to put you on notice for that. Because if we see like a big sharp decline like this, well, that's March, April. That's when the what was hitting the fan, isn't it? And we're not that far away. If this was any other chart, the chart of Treasury Wine Estate, for example, you would totally agree that that's a high probability to see that sort of move through there. And I fear that that sort of move will not be received well by the stock market, even though it does foreshadow lower rates, but it's foreshadowing those lower rates because something bad is happening in the US economy. Let's bring it back home. We're heading the other way, which I'm guessing the Aussie dollar should be appreciating if that's the case, because our local interest rate situation is far more hawkish. If there's something I've missed, let me know, but otherwise I think that pretty much sums it up, which is the whole goal of that first part of the presentation. Let us then go to your offline requests. I've got Mick, who's come in with a few potential minus 1/3. The first one being on LTP, which got off to a great start and then has just been rubbish, hasn't it? So not precipitous rubbish, just frustrating rubbish, isn't it? And look, that's Friday's candle. That's the one the blue line is on. Oh, you can't see it. Now you can. That's an optimistic candle, isn't it? That's the important one. Actually, I don't think we're too bad here. We had a manager risk through here, so it kind of answers your question. If you were to say, well, Carl, I wanted to see whether it closed beneath the short-term uptrend ribbon, and I'll do double if it does that, no problem. We still know where our point of no return is. We still know we're managing a risk. So I don't need to do a whole lot here. I will certainly upgrade this though and go minus 2/3 risk position there. Capital R please, as a minimum, I suggest, on a close beneath the short-term uptrend ribbon. I don't think any of us would argue with that, because if that was to occur, okay, how many lower peaks do you want? How many lower troughs do you want? How many black candles in the system? There's just absolutely no way, if you're following my model, you could continue to hold more than 1/3 there, and even then, I think that's contentious. Let's go to VUL, which is Vulcan Energy. Yeah, look, not great. 77 around number, no. Like, nobody's going, please God, if you could let Vulcan Resources go to $7. It's just not happening. 10 is a big round number, 5 potentially, but not 7. So if you didn't get out there, no problems. None of those candles by themselves are sufficient, I believe, even though the probability associated with those 3 in a row is not great. Today's kind of confirmation of what we already knew. I've no issues just knocking a third here, to be honest, just on the basis that we're certainly not adding risk. We know that much. If I'm not adding risk and I've got a decent signal, why am I holding all the risk? So this is just me. You can do whatever you want, but I'm knocking a third, and on the basis that it's probably going to pull back a bit more. I might even get a better buyback place on this down the track. Would I do more than that? It's a gap and run. Blend these candles together. It's not a good candle. Would I do more than that? I don't think so. Not at this stage, but not far off. Let's go to BRN, which the question mark was also minus a third. I can't find the plus 1/3 here, so I would question the minus a third, because how can you minus a third when you never had a third in the first place? I cannot see a single reason to add risk to BRN unless you've had this for a long time, and then I can't see a single reason why you would have it for a long time. So I'm not even going to comment on that one, Mick. Let's go to your online requests, and we are going to go Hayden, who's saying, Carl, interesting times. Interesting, stupid. We could debate, couldn't we? Interesting. I don't mind interesting. Stupid. I don't like stupid. FRS today. Another one from Hayden here. FRS. Yeah, okay. Manage risk. What do we say? Manage risk. Maintain risk. Oh, I got caught up in my new acronym there. Maintain risk. You could easily say manage risk. Maintaining our risk position minus a third would imply managing risk. So I think it's still the right acronym. Plus 1/3 if we saw a demand side candle. That's what we said last week. We haven't seen a demand side candle since last week, so we haven't added risk. And we've got some problems potentially with today's, actually it's Friday's, I was going to say, looked like see that little X? I thought that was a candle. It could well be a candle. It's possible. It's not a candle. Today's candle is the one we've got the problem with. I don't know. I didn't draw any lines. Well, I did. That's not true. I did draw a line. You can see it. It's right there. What I didn't do was write anything underneath it, but I think it's safe to say that today's the day, isn't it? Today's the day with the close beneath at least 1 point of demand, I feel in there, would be a minus a third for me as a minimum. And closing beneath the short-term trend ribbon. See how you go with tomorrow's candle. Market might rally tomorrow. So I'm gonna put minus 2/3. But it would be contingent on just see how it opens. If it's trading beneath that level, then you would toss it. But if it kind of opens steady and starts to go back up, then give it another day sort of thing. You could almost say, give it another day. I don't know. It's a pretty nasty candle. Yeah, I'm just going to stick with my first instinct on that one, I think. The only thing I'm worried about here is that it just tomorrow's move reverses all the bad candles today, and then you just dust a bunch of risk for no good reason. No, I'm going to stick with minus 2/3, but if you wanted to give it another candle, no complaints from me on that one. Minus 5/6, keeping some skin. Well, you can't answer your own question there, Hayden. I don't agree with your current course of action. Maybe slightly hasty. Let's go, and on the subject of hasty, let's go to Hastings Technology, which is your next pick, and obviously big pop up. One of the many pieces of just total junk. Everybody, I mean, how many stocks look like that? And then it took. Let's face it, this is the best thing that's happened to small cap mining stocks probably since COVID, when I was going to use a word there. First syllable rhymes with class. Second syllable rhymes with mole. Every class mole was sitting on their couch punting stocks, right? Back 5 years ago, and all of this junk ran. And many of you probably got sucked into the stock market and have been trading since then. But this is the greatest thing to happen to small cap mining stocks since all those class moles got involved. And all those class moles, let's face it, got stuck, didn't they? They all got stuck up there at crazy, crazy high prices on all of this junk. There's still people stuck in this junk at 550. And don't worry, this thing's going to go back to zero at some stage. But that doesn't mean we can't trade it. Don't get me wrong. There's nothing between the lines there. We can still trade this stuff. But just understand that this stuff will go back to zero. Well, it wasn't zero, but it'll go back to being junk again. And we just have to be, mindful of this and vigilant in our timing and reading of the candles in between. We don't want to get stuck like all those other class moles in these stocks way up the top when the liquidity dries up again and there's nobody to buy this crap anymore. Okay. In the meantime, small amounts of risk to these are also good. Right, just having small cracks at these, because if they're going to move quickly. And you're seeing some of the evidence of Deadwood taking advantage of the rise in the price. We've got a bit of supply coming in here. Obviously, the big white candle. This is this one. They're places to get involved. It's a play. It's no more than a play on the fact that it could go 50 to $1 very quickly. But if it doesn't, we're not going to get stuck in this thing. I can see some supply coming in. I can't see any reason to manage risk just yet, but I am watchful of what's happening here, okay, in that zone. So I think we're all experienced enough in these matters and in my model now to understand what would escalate this idea of where we're going to manage risk or the timing of it. Okay, what would expedite is probably the better way to say it. So for me, it's an MRP. I can't see any reason to manage risk just yet. I'm certainly not adding risk. I'm open to adding risk, but I would need to see a white candle that closes at least 62 cents. So it would need to, for the vast part, knock out the supply that we're seeing in here. Is there anything sort of sinister out the back that's causing this particular level to create supply, or better way to put it, that to see supply manifest itself? Because these things are rarely coincidences for these ones that are turning around. So if we can see there's a period of time where a lot of people, a lot of punters got stuck in this stock, and of course on the way down, they were thinking that was rock bottom, weren't they? They think, geez, this Hastings Technology, that was a $6 stock. This thing is so cheap. I'm going to load up. And when it goes back to $6, I'll be making a fortune. And for so long, they've just been regretting that decision. Now, there was a lot of them in there, and some of them, not all of them, but some of them are looking at this area as a place where they can finally undo that mistake. So it's probably no surprise that we're starting to see a bit of supply creeping around there. Doesn't mean we can't clean them out, but we need to see a strong signal that that's occurring. Plenty of volume going on here, so we are interacting. We're trading with that supply, and that's a good thing. So there's lots of good stuff here, but we're just going to be mindful of what can go wrong in some of these small ones. Okay, we're not going to get carried away like every other punter out there. Hi, Carl. NVA, sorry, I've missed one there for you. Hate it. NVA, which is still looking good today. So this is a great segue, because we saw, look at that. I couldn't have picked these any better, but there you go. So you've got bounce, 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 bounce. Oh, I love this pattern though. I call it the bouncing ball pattern. So imagine this is a tabletop here, right? This is a tabletop. There's the legs of the table, right? There's the tabletop. And if you drop a tennis ball onto a table, what does it do? It bounces, then it doesn't bounce up as high. Hits the table, bounces, doesn't bounce up as high. And eventually it misses the edge of the table, and then there's just nothing holding it up, and down it goes. But what we can see is a bunch of people getting in on the table, which means that potentially a bunch of people need to get out of the table. Not all of them, but some of them will feel like that. Geez, does it sound like I'm repeating myself? Of course I am, because that's exactly what we saw in the last case study. And that's why I said I'm open to adding risk on this. Just because it's had a couple of bad shadows doesn't mean it's going to go back to being rubbish straight away. It may get to $1 before it does that. And we saw exactly that happen here. We saw that supply manifest itself in the market in the exact candles that we'd expect to see there, but then we cleared it. Coincidentally, this one's now moved into the next zone, which, yeah, look, it's a wide-ranging zone, but there's a zone up there, not showing any signs of distress or exhaustion just yet. I'm happy with that one. If I had risk on that, I would certainly maintain it. Would I add risk to it? Yeah, I can see that. Look, I can see it going to $1. Understand that, that's our near-term target in terms of the next critical point of supply. So certainly MRP. Look, if this is the best setup you can find, I've no issue with you adding risk. Is this going to be the best setup we can find in terms of not just the demand-supply environment that we're seeing, the imbalance between demand and supply, this excess demand, strong excess demand, but also reward to risk. And that's why we come here on Monday night, to see what other people are looking at as well and to debate these things. Thanks for those three, Hayden. Let's go to Daniel. Hey, Carl, I was away for a week, so I missed a bit of the action. The only hold I'm worried about is ASB. Yeah, I did see that have some issues during the week last week, and yeah, that is a big problem right there, isn't it? So that is a big black candle. I don't like them. You don't have to jump as soon as you see one, but we do want to see the next candle response, and that next candle response is not good. It's disturbing, and today's is even worse. So because we've closed beneath here. So yeah, I think this one's pretty straightforward for me, and you always phrase it this way. Could you possibly, like if you are a trend follower, could you possibly hold a full risk position on this? And I don't think the answer could possibly be yes. So in my opinion, I would have less than a full risk position. And that candle in and of itself would be enough for me, because it's the second time, isn't it? It's the second time that it's happened from the same spot. So if you did a third on that day, no complaints. Okay, if you waited another day, I get it. You're waiting for confirmation, and that's the day. Plus, it's closing beneath the short-term trend ribbon as well. For me, I think I'm minus 2/3 on that candle. I know you can say, "Oh, Carl, you're just saying that because you can see what happened next." No, I think we all agree that with that black candle, that confirmation, there was no rally at all. And it closed beneath the short-term trend ribbon. These are objective measures, not subjective measures. I think that warrants that. And then the question is, what do you do today? Do you hold that 1/3 that you might have been holding on the basis that, well, it's still a long-term uptrend and it's got a great pedigree? It has. I think this is more and more looking like, at best, an equilibrium phase, or at worst, a reversal pattern. And this is just me, you can do whatever you want, but I think I'm here. I think I'm minus 1/3, which equals ZRP on this one. Might be famous last words, but that's what I'm going to go with. Just trying to figure out what Brett's doing. He's walking towards his car. There he is. Hey, Brett. Let's go to, I hope you're not going to be driving and watching me do charts and driving at the same time, Brett. Let's go to PGO. I should read what Daniel said. The only hold I'm worried was ASB, thinking of minus 1/3 to 2/3. Well, I think 2/3 is a candle back, and minus 1/3 today. I'm ZRP. PGO as well, high risk. PGO is that one. Well, look, it's the start, isn't it? So it is high risk, in as much as it's an aggressive setup still, bordering on a turnaround setup. Well, I'd say bordering on a turnaround setup because, yeah, it's breached the long-term trend ribbon. It's pulling back, and that's what we need to see. We've got some decent volume. It's on some radars, definitely. It's got a decent base pattern. Short-term trends up, good price action, and some interest, and another piece of junk that will go back to being a piece of junk at some stage. But for now, it's in play, and that's what we care about. So it's a yes from me in terms of it needs to be on the radar, happy to keep an eye on it, and all you're really looking for here is another decent candle. I'd like to see some volume on that candle because we want to see the interaction with supply. There's so much deadwood. Think about how much deadwood is in this thing, right? They're dead. They're just waiting to get out. Yeah, we're going to go Phil White on that one. So that's, see that. And then I'm happy to add risk. You see that. And I'd happily add a third. on that one if I see it. Let's go to Hoozle. US market is open today. Hey, you could be right. I just saw close for Columbus Day on the Forex Factory calendar. I didn't read any further, so maybe they are open tonight. So could be right, Hoozle. I don't know. Columbus Day holiday. Somebody Google it. But I'm happy to go. It's not that I don't believe you. I'm happy to go with Hoozle. So we'll say it's open tonight. TSX looks shut, says Roscoe. Re-rating is good, says Robert. I don't know what he's referring to there. Re-rating is good. Oh, the re-rating, yes. You're talking about your lithium stocks getting re-rated and your critical mineral stocks, which are just going berserko. What was it? Well, there's one there. I was trying to that CRI. Oh, man, look at that thing. ARU, which I said to you rather cheekily last week. I can't really justify it, but I just have to run this as a feature today because I can just feel what was happening. ASM, this is re-rating. This is just re-rating stuff. Is good, says Robert. I agree, man. Hey, I love shit going up for no good reason. I love it. You know, if I was a certain value investor that just keeps tweeting stuff at me about how their brain is exploding because shit keeps going up for no good reason, I wouldn't touch any of this shit, right? But you know me. If it's going up, I'm there. Douche, 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 douche. If there's a party, I'm there. Thinking back to my 20s. Yes, you would have found me. Let's go to, not now, too old. Let's go to Evan. What is your view on company share price as it approaches key broker fund managers' forecast price target? This is a great question from Evan. How do I feel about key broker fund manager forecast price targets? What does everybody reckon? What do you reckon? What does everybody else reckon? I think about broker price targets. Here we go. You know me too well. Let's go SKS. The same brokers, 6 of them who are long this stock here, right? Telling their clients to buy this shit because it's cheap. What do you reckon I think about them? Okay, let's keep going. Now, I did get an email from a particular super fund, a major industry fund, like one of the big ones. Seriously, one of the big ones. One of the fund managers manages hundreds of millions of dollars for this fund, and he said, look, I love your work. I do look at technical analysis. My boss doesn't mind it, and I'm trying to incorporate some of his stuff into what we're doing, and we're certainly taking account of it. So, well, there you go. I think that's good. The message is finally getting through. All right, we were talking about SKS. Okay, well, look, that candle has got to be the end of the world, doesn't it? Black candle, that's it. Jump out. It's all over. Lock in profits. I'm being sarcastic. It's one black candle amongst so many white ones. And I know how you all feel when you look at that. I know you go, that's it, minus a third. At least I've probably pared you back, at least, haven't I, to just a third. Maybe in the old days, you would have saw, if you're doing technicals, you saw one black candle and you were out of there. Hopefully, I've done my work and I've pared you back to, okay, I've got to scratch this itch. I'm making too much money on this one. I've got to scratch it. And you go minus a third on that. I don't think you need to. I can see why you might. It's not a great candle, but it's about consistent with what happened on the ASX 200 today. I don't think there's anything sinister in that candle at all. It all looks pretty normal to me. We all know what could happen. We could get more black candles and that's the end of it. But we don't know what will happen. What we do know is that there's just the most amazing trend there. And for me, call this the flaw in my master plan. I have to make myself trust it. I'm still an MRP on this. I'm not minus a third. If it gets worse than that, certainly I could go that way. Confirmation of that candle, similar sort of candle, would start me thinking, look, even in a time stop, there's still so much good stuff out there. As a time stop, even minusing a third on this, just to get that money working harder somewhere else. That's closer to the start of a move, near its short-term uptrend. That's just sort of breaking out through a base pattern. Maybe that third is better applied there. This is still a mature trend. It's going to have pullbacks, I know that. So knocking a bit of risk out and just reapplying it, knowing that I want to keep some risk here and I want to come back to this when it does its next move up. I'm still an MRP, but if you have to scratch that itch, then I would not object, but I cannot see any reason ever to do more than a third on that one. Let's go to, that one was for Michael. Robert's got TK on TSXV. We'll do that one at the end. AYA is looking very good, Robert, I think. Today's candle I like. Today's candle, I actually ran this. I don't know if I ran it as a feature, but I certainly ran it in the main list. It did make features simply because of that little upper shadow, and that was me being really pedantic because I had a bunch of other ones that did have perfect closes. A little bit close to $3. Not that that's a big round number for me. I don't think people are worried about 3. Let me just zoom that out, and there's nothing really there I need to worry about, is there? So let's go normal, and that is normal. That's all the price action. So I'm liking that even more. It's kind of like one of those US stocks, and when we zoom out, we don't see anything in the background. And now I'm kind of questioning why I didn't run this as a feature. Certainly, it's a plus 1/3 risk position for me. So if I've got it, I'm adding risk to it. If you don't feel like you need to, you can maintain risk, but I'm also happy to add risk, and if you don't have it, then happy to add risk. There's nothing I don't like about it. It's as simple as that. Let's go to SGQ, which is another one which I think is very, very good. I know a bit of an upper shadow today. Is 15 a round number? Not really. But you can see why some people might want to sell at 15. And I think that's probably all it was. 17's a bit of a level, but I'm still fine with this. That is not anywhere near sufficient to cause me to want to manage risk on it. So happy to hold at this stage, MRP on this one. And happy to add risk on the next demand side candle if I see it. ARR as a minus 1/3. I don't think so. It's not. Look, we don't like those upper shadows. I've brainwashed you into thinking that they're not great. In fact, I probably didn't need to brainwash you too much because you've seen yourself they're not great. You kind of know what they mean now. That I'm not just kidding when I say it's supply starting to come in. Is there a reason? Oh, yeah, I mean, there's a bit of a reason there, isn't it? So when they occur where, at a point where we've seen a major supply level from the past, we're less surprised by it. These things don't shock us. We expect a bit of supply there. So, yeah, not too fussed about that. I'm okay with that. I don't think that's enough in and of itself to do anything with it. I'm still an MRP. But as I said before, I get it. I get why you might scratch the itch there. If you do it and you've got a reason, you've got a solid reason, you can go back in a year's time when you're auditing your trades. I did a minus 1/3 on that day, and you go, I did it because of the upper shadow. It doubled in price after that, but I know why I did it. And we're only talking about 1/3, aren't we? If it doubled in price, we'd still have 2/3. Let's go to, where are we going next? Going to SRL for Evan. SRL, which, that's a wild chart, isn't it? It's doing, look, this is far more severe than I would have liked. Was there a manager risk event in there? I think some of you are probably looking at that candle. Not that candle's the event. That candle starting to be pretty warm, and that candle there. I think those three together warrant just knocking a third of risk off the table, even if it's only because I know I've still got 2/3. I'm going to get that third working somewhere else. It's a hot market. This one here, questioning whether with the gap you would do another third, and that would be it. I mean, that's the most we've seen up to this point. And the reason why I say it on that one is we did close beneath that. So can I offer to you that candle there no earlier, minus 1/3. This candle here, minus 1/3, because of the close beneath the trough there. So looking for objective reasons, not subjective. And we're still running with 1/3. Happily, I think, running with 1/3 at this stage because we're seeing the bounce off the short-term uptrend ribbon. And I think we've got a really sensible path now to finalising that third. Hopefully, we're adding third. Hopefully, we're not finalising anything. We're adding. But if we were to see, another supply-side candle, it moving higher towards this peak and then flaming out with an upward pointing shadow, low close, that's in there, I would do the next third. Or if I didn't get that, that would be a fantastic early warning signal. Hopefully we don't get it, but if we got that, that's great because it's early warning. And the reason why I say it's great early warnings because what we least want to see is the death by 1,000 cuts option. We just get nothing candles that just drift, and you know how this feels, drifting back down because we know that that's where our final release point is. So I'll just do like a question mark minus third in here, and we would say next supply side candle, and we know close below is also minus a third. That's the point of no return. So always having a plan for our exits that we cannot go back on. Like we're either going to see that candle or not. We're going to close beneath it or not. We are not going to be that little black duck that says, oh, maybe if, should I? Well, it's still good. And you know how that story ends. You've been a major character in that novel, that sad and sorry novel before, haven't you? That's not us anymore. Okay, NHC. We're looking for a short on this, I think. Would you add risk on next high close after decent drop? Okay, I don't think we're talking about NHC. I think I've answered your other question, but hey, we happen to be here. This looks pretty decent for a short to me. There's a few other shorts there that I'll bring your attention to. Let's have a look at these because if bad things are going to happen in the world, why not have a few shorts in play? A4N. APX is just perennial. I mean, I think you can just short that forever, can't you? AQZ, AX1. What do they all have in common? Batcore, Cochlear. Look at that. How good's that? Just clockwork. Hey, I don't know if it's going to go down, but if it does, this is one I'll be crying about for a long time, isn't it? With my long-term trend ribbon just perfectly anointing that spot as the reversal. And this is textbook here, isn't it? This is how markets work, ladies and gentlemen. Demand side control. Either demand pulls back, supply increases, or a combination of the both. And what do we get? We get equilibrium. And then we move into supply side control. Excess supply. It's just cycles. It doesn't matter what they are. They're just three-letter codes. They're just pixels. It's underlying all of those pixels is demand, supply, and price. EBO looks terrible. EDV. One of my colleagues wrote an article about this stock being the worst stock in the ASX 200. They didn't say whether it's a buy or sell, all due respect, but they did point out that it's the worst performing stock in the ASX 200. And I get the feeling they were sort of intimating, well, could this be the best stock next year? Let's go EQT. And that's okay, everybody's got their own opinion. Who am I to say? Who am I to say? What do I know? But just for me, it stood out as well. What are you trying to say here? Let's be direct because everything I say is direct. You know how I think about everything I talk about. GQG, GTK, look at these things, ladies and gentlemen. OML, RWC, Sonic. You would put this in the camp of blue chip, wouldn't you? Sonic Healthcare, Teeth, and Woolworths. Very interesting. Defensive, right, or not? I don't know why any of these things are going down. They just are. Okay, let's keep moving. I think it's important to talk about the shorts. Let's go to GHM and keep moving. GHM, how are we going for time? Not too bad. Not too bad. I'll let that go for another couple of minutes, and I'll call last drinks. Down the bottom, let's go to this one here, which looks fantastic. I ran this as a feature chart for tomorrow. Unlike all of those shorts that we saw, it's the exact opposite. It's a picture of demand side control. It's perfect. There's nothing I dislike about this. There's everything I like about it, and therefore I have only one conclusion. Because whether you like my stuff or you hate my stuff, hopefully you agree I'm consistent with my stuff. Let's go to LYC, which is another one which Show me the exit there. And if any of you took LYC based upon anything I ever told you, show me where you took some off the table. Can somebody put a price? Just put a price down the bottom, Carl. I took some off the table at this price. And I'd let you get away with 10, right? And I'd let you get away with 20. And maybe I've stolen your thunder. But they are the only two places in that last move that you would have been allowed to sell any, and then you would have had to scramble and buy it back anyway. So nobody's typing anything, or they're too shy to type it in and saying, Carl, I sold this thing ages ago. Ages ago, I got out. I've been kicking myself ever since, and I haven't been able to buy it back. And I watch it go up every day, and I curse Lynas. But you don't curse your luck anymore, do you? You don't go, oh, I never get the good ones. You go, I sold it too early. And then psychologically, I couldn't get over the impediment of selling it and buying it back. I couldn't do that. I know exactly where I went wrong. Hey, I'd rather be in that camp than, oh, I'm so unlucky, I never get the good ones. Let's go to, Robert said he sold a third at $20. Congratulations, Robert. Well done. Perfect. And I think that's where we are on this one. I don't think we're running a full risk position on the basis that we must have, it's compulsory for us to have gotten a third out at $20. That's just the way we roll. And we cop it. If it keeps going, we cop it. We've still got 2/3. If it pulls back, we say, well, that's why we sold it. You know, it's got nothing goes up in a straight line. People love to take profits there. It's a potential supply event. And I think that's where we are. I think we're at plus 2/3 on this one, and we're happy with what we've got. I don't think we're adding risk until, certainly not on those last two candles, but you might see one or two candles pull back and then start to go again. We could add that third back, and if we brought it back higher, that'd be it. That's just the way we roll. What was the question there? I should go check the question. Based on the last two daily candles, would it be advisable to remain FRP or take a third off the table tomorrow? No, I think I think we're a third already. And if you haven't done the third because of the round number, then after those two candles, do you need any more of an invitation? Would you go to 2/3 based upon those two candles? I think that's probably the question. And I don't think so. I think that's a drastic move at this stage, just on those two candles. Just blend them together. Even if you blended them together, they're not that bad, are they? Within the context of that broader trend. Where would it start to get really bad? Where's the next third on Lynas? I'm guessing I've got a few people in. I don't think I'd want to see it close beneath there. Like if we saw a black candle closing, something that looks similar to this, and that's going to turn black in a second. I mean, how would we feel about this? I feel like we're a collective brain now. We're all on the same wavelength. How would we collectively feel about that? Those three candles now. I mean, are we going to hang on to the 2/3 risk after that? I don't think so. Would we go all out after that and lose that final third of the position? I don't think so either. I think we probably just want to keep a bit of skin in the game. We're probably playing with profits by then. But that would take me out another third, I think. Let's go. So Perry, thank you. Perry's back. Fantastic. I'm so glad you're back, Perry. So we'll stop at Perry and then we'll head back up the list. Let's go to, so you were noticed, Perry. Your absence was noticed. How's that? That must make you feel good. I could be out of the house for days and my kids wouldn't even notice I was gone. Well, that all depends, isn't it? It's like the Capilingua Uber service. Like how would you get to the shops and to your friend's house? And yeah, so that would be noticed. There'd be less food on the table or in the shelves. That would be noticed. Let's go to Sue, who's got, hi Carl, hope you're well. I'm well, Sue. I'm loving life right now. I love markets like this. I think they're fantastic, and I'm getting so much positive feedback. Not just from you lot. I don't get any good feedback from you lot apart from here, because we chat every Monday night. But I'm getting so many emails. You can't believe how many emails I'm getting at the moment from market index people who've probably been now sort of doing my stuff for about 6 months or 12 months or whatever, and they're actually starting to shoot the lights out. And I'm just getting these fantastic emails. And I know we're probably pretty close to the top of the market when that starts to happen. But no, I'm pretty happy with what I do at the moment, and it seems to be making a difference, and that's why I'm doing it. Can I please get your views on CHN Yes, you can. So that's disappointing, isn't it? I thought this one would have had more legs in the current environment. And it's a tricky one because we know this one's a bloody hard one to trade. And many of you have probably had a few false starts on it. I would have liked to see it do better than that and that. It's kind of just given up the ghost without an effort, hasn't it? We're still holding. But, look, that's a level, and then that's a level. So just sort of plotting a path out of it and dependent on candles, right? I'm still MRP here. I'm disappointed because every other critical minerals thing is going, and this one is just stuffing about. But I still think there's enough in there to warrant maintaining the risk position. I'm certainly not adding, and I've just created a path out there for if it doesn't go the right way in this market, because we want to stay at the cusp of the good stuff. Doug Technology, I think, is fine. Very similar to that last one, isn't it? In that, not the ideal candles you want to see after what was promising to be a really nice little base breakout point. We can see we're not far from what will be, I think, a major point of supply. But otherwise, happy to hold. I'm happy to go add risk on the next demand side candle. I don't see anything in there that warrants me managing risk at this stage. The next sort of little trough levels down here, aren't they? So that's the most obvious place, and that's your short-term uptrend ribbon, and maybe you're just having to give it a little bit of room to move in there, unless you saw the most horrible black candle in the meantime. So I can still go MRP on this one. That's very mild, isn't it? That's very mild in terms of bad stuff happening. And ELS, not that one, ELS. Yeah, it's stopped here, obviously. That's the level. How big's that level? Through there, certainly through there, at least through there. So, that's what it's dealing with. At least we can see that. And this is one of those that you buy. You see this candle and you add some risk and you say, I'm going to have a crack at this. You're going to it eyes wide open. There's a major point of supply and you're just saying, I'm backing on this thing breaking it. But we've seen a reaction, haven't we? And a few days on the market where people just haven't been as high an appetite for risk seeking on defence stocks. That's all. So you've seen ASB come off. You've seen a decent down candle in Drone Shield today. Just some of these defence stocks have just coming a little off the boil. I think punters getting distracted by the next shiny new thing. And that's probably what we're seeing here. So you need to have a time stop as well as a price stop on this one. Should it go the way of, defence stocks just aren't the favourites anymore. Obviously, we've got a short-term uptrend ribbon there. We've just got these objective points of managing our risk. That's all. So we have to have something. A lower shadow there that we can watch. One here as well. Look, this is all the level, isn't it? Trading in the 180s, and it would be hard to argue you'd maintain a full risk position on this. And it's a variation of minus 1/3 or 2/3 as a minimum, I think, beneath there. That's a tricky one. That's a really tough chart for me to call. I mean, there's nothing clear cut in that, in those last 5 or 6 candles. And I think you're on the right track there, Sue, with exactly what you said as well. From George, hi Carl, how do you manage some of these stocks with poor liquidity even though the charts look good? Well, give me a case study would be helpful, but some of them do have poor liquidity. If you're an individual, it doesn't matter. If you're a big fund manager, it's very hard to get in out, but I think it's one of the big advantages of individual traders is you're nimble enough to be able to trade some of these smaller ones. I don't think it makes a huge difference in terms of where these objective areas are. So there's still going to be a trough that's formed. This 100%, and if you might not have great candles because you often get these little sketchy little things, but you still have peaks and troughs that we can peg. And as a default fallback, we'll always have the moving averages, right? My trend ribbons will always be there to help us. So just stick to the plan and look for signals in trend and price action at the very least that demand side is still in control, and if that's not the case, then sort of managing risk. But without a specific case study, hard to say, but I don't think you need to trade them a whole lot differently is probably the broad answer. Let's go to ASBZRP. Michael's agreeing with that. Brett saying, sorry, Fat Finger's just walking to the supermarket. What are you doing going to the supermarket during live market analysis? Let's go to SS1 and Sun Silver. Yeah, I had a... we'll go in detail on that. So maintain risk plus 1/3 last time. It looked a bit dicey, but never closed beneath a short-term uptrend ribbon and can go the same this time here. Today's candle is substantial, actually, with that volume. So that's impressive. Silver stocks are tricky, but I'm happy to stick with that one. Let's go to IXR, which did pop up today. It certainly made the broad list, but it just missed out on feature because that little upper shadow, just a tiny little bit of indecision there, coming into maybe a few levels here also. But certainly a very, very strong chart. If it's the one that you think is the best, I have no objections to it. I'm not sure if I think it's the best, but if you're happy with it, then I have no objections to adding risk on that one. I think it's as good as many out there, but probably not as good as some. Let's go to NTH, which doesn't ring a bell, and I wonder if it's meant to be NTU. If you meant NTU there. Oh, that's on the TSX. Well, I've put up NTU, which I think looks very, very strong there. That's a clean move today. It's unadulterated. That is just a very clean move, and you can see it's actually just pushing through a few major points of historical points of supply, so that's a bonus one today. It is in the feature charts for tomorrow's chart watch. We'll look at your other one on the way back up. Peter. Perry's got US stocks. We'll do those on the way back up as well. Michael's got CHR as a turnaround setup, which is a yes from me. I like this one. I haven't seen it up to this point because it's not on, hasn't met my liquidity filter, you can see there. But I like this, yeah, as a turnaround filter, as a small little specky that's going from nothing to something. It's in the right place at the right time. We'd probably, if you look at what constitutes a surge in interest, we sort of peaking past twos there. What got it going initially? I guess it's a fairly recent. I'm just questioning whether there's enough interest there, but yeah, that would be my only criticism. I'd happily buy this. It hasn't really dinked back to the long-term trend ribbon, but I think it's done enough there. So I'm MRP if you've got it, certainly. And if you don't, I'm happy to add risk to this one. I think this is a really nice little turnaround / aggressive setup there. And this is a good example of the question before I was asked about liquidity, and the answer is I just trade them. I go through the same process to get in, I go through the same process to get out. Robert saying minus 1/3 on Lynas at 20. We talked about that. We've got ANZ, which I think looks very good, doesn't it? And I know, Perry, you've picked out a lot of these financial services and banking stocks in the US they're having a fantastic run over there, and ANZ looks just like those. So yes, for me, that's been in the major list several times recently. Certainly the most featured of our big four banks. I can say that with confidence. And I do have a tool offline that you can't see, and I can't make you see it because I can't get Excel to work in OBS, but it shows me every time I've put something in as a feature chart, so I can see that it was in on the 9th, which is I'm saying that candle there, on the 8th, on the 3rd it went in, that one there, and these are features, so on that day it would have been run as a regular one, and then it went in August, around the 15th, so around there, the 12th as well, so you can just see. And if you're curious, I can now do that with any stock. If you want to say, hey Carl, can you tell me when such and such was featured? I can just type it in now and see that. Let's go to Perry's done ANZ. We did NVA earlier, so that's a very strong setup. And EUR, which nobody's talked about, but this is also a feature for tomorrow. That's a cracker. I'd happily buy that. And it's one of those where you might think, I can't possibly. I think this is an extremely strong setup. I think this needs to be at the top of everybody's list. If you don't feel that you can buy something that's gone up that vertically, do a sixth or whatever, $50, $100, but this is an absolute yes for me. And maintaining risk position plus 1/3, or whatever you're more comfortable with. Robert, yes, confirming about Lynas. George is laughing about something, I'm not sure what, but I'm glad I got you laughing today. Ouzel's got a tween at home, myself know the feeling. Tough Dad Life, oh, it's good fun. As I said, I'm doing driving lessons now and things like that. CHN has hit weekly trend ribbon resistance, as in support perhaps, CHN. Weekly, okay, yeah, I get what you're saying there. So if I go to the weekly chart, well, there you go. How about that? Does that factor in to my analysis? It doesn't really, no. But I can see why if you were on a weekly chart, you look at this. I mean, I don't want to get rid of those labels because we need them. But wow, if this was a daily chart, we'd be going at. That's exactly why it's finding a pause there. Very well observed, George. Jackie, and then we're heading back up. EGR. That is a very, very strong weekly chart. We're going to head to the daily chart where it looks just as strong. This one I have featured very recently, EGR, as recently as the 9th of October, which is on that candle there, and then not since March actually, so we have to go back to here. Hasn't done a lot since March, but FYI. But yes, that is definitely up there on my list for tomorrow, Jackie. All right, let's head over to the trading view screen and we'll head back up the list. There's not that many, but bear with me on this. A couple of TSX ones which I'm expecting are going to be pretty interesting right now because they're full of gold stocks and other precious metal stocks like we have here. Well, there you go. So same conceptually the same thing. Just because it's on the TSX doesn't mean anything is different for us. We trade it in exactly the same way. And I'm just seeing where there might be other levels. And this is another piece of junk. It's just a piece of junk somewhere else in the world, isn't it? But it's having its day. Yeah, look, no complaints from me. Obviously, signals here, even as early as here on the first moves. But no complaints at all. So a bit like that EUR. It's still showing a very strong candle there. So yes for me, and some people might say it's too high to buy. Look, I don't know. I don't know where it's going to go next. I can't tell the future, but I can tell you that demand is falling over themselves and supply is hanging on. And that is usually the right time to be having risk on the table. Let's go to TK, which actually is TK. Well, it's TK in the US. I wonder if it's the same thing on the no, it's not. It's something else. Tinka Resources. Look, I don't think that's as exciting as maybe the other one, but it's certainly on the move. It's the same shape. It's the same setup. We don't have volume here, so let's get volume back, and then I might go have a look at that other one. In fact, yeah, I'll open anyway. I was going to get the relative strength and everything else. So we go TK over here, and I was going to say that there is volume. Well, it's been sort of, the scale is ruined by that, but there is some interest coming in, so that's okay. And then the previous one there, which was NTH, just checking the volume on that, making sure I'm doing the due diligence. So, okay, well, there you go. You can see far more interest on that one. If I had to pick between the two, I'd go that one, or find one that's maybe a little bit further back, but more advanced than the TK, which I think is just a bit bumbling along, isn't it, in comparison? Not terrible, but just a bit slow. Not terrible at all. Okay, let's go to, I know Perry had some US ones there. I don't think we've got Adonis today, so normally he finishes us off with the US ones. No, I can't see him up there, and I'm just trying to find your US ones, Perry. They're in there somewhere, I know. There we go. Gotcha. SO, which is Southern Company, and yeah, it looks great. That's a nice chart. Heading back to the weekly chart to see if there's anything out there. There isn't, and I'm liking that on the weekly chart even better. There's really nothing there that I don't like about it. I'm just going to go check the relative strength comparative. Which that's not it because it goes back to the default, so don't panic. I'm guessing we're going to get, oh, it's actually, look, that's interesting, isn't it? So let's go double click. it's compared against the Nasdaq, so it's actually underperforming the Nasdaq, which is interesting. So that would be the only black mark. I mean, and all that's saying is, look, is there better stuff out there? Is there better stuff out there? I trust you've done the due diligence and you're telling me there isn't, but yeah, everything else certainly checks out. I'm not going to say no to that. That is a very, very strong looking chart. It's coming up to $100, but we're so close to it. $100 is not a surprise for this one. Let's go to NAMS. Don't want that one. NewAmsterdam Pharma. Oh, see, this one's a bit hotter, and you can see straight away. This is now we're comparing. You know, the Nasdaq's going up, and SO's going up, but it's not going up as fast as the Nasdaq. Here we're smashing the Nasdaq. So, and that just shows how that RSC can help you compare two different stocks. If you needed that one final flourish to help you decide, then that might be it for you. There's nothing there to worry about on the weekly chart. This one's very hot. That's probably the best chart I've seen today. MRP. Maintaining our risk position or adding a third. If you haven't been here for a couple of weeks, I've changed FRP to MRP because we use that FRP in our index analysis, don't we? Our total risk position. So I just wanted to separate that idea from the individual trades. So we're maintaining our risk position. And for anybody else who hasn't been around for a couple of weeks, if you're wondering what that MRP is all about, I'm pretty sure that's it. And if I didn't get to one of your US ones, just pop them in down the bottom. I will come back and check, but I think we're done. So let me just read the disclaimer, and if something else does pop up, then I'll come back to it. But don't forget, of course, that everything we've discussed tonight is general in nature. It's not taking into account personal financial circumstances, objectives, or particular needs. So before acting upon any of that stuff, you should consider it carefully or seek the help of a financial professional to determine what's appropriate for you. Never forget that you could lose money trading. You probably will. And it's always you who's responsible for the stuff you do and not me. On that cheery note, and without anything else coming up in the list there, let me thank you for joining our little community tonight, and hopefully, thanks for contributing to the community as well. Hopefully you enjoyed your time here. I certainly did. All the best for your trading and investing. Until we catch up again. Bye-bye for now.